Once the biggest Bitcoin exchange, Mt. Gox gained notoriety for one of the worst hacks in the history of the cryptocurrency. It was founded in 2010 and gained popularity fast, although it had several security issues. A sharp drop in market confidence resulted from the exchange's bankruptcy in 2014 after losing hundreds of thousands of Bitcoins. In addition to changing the Bitcoin exchange environment, this incident brought regulatory attention to the sector and made clear the need for stronger security protocols. In this video, we will go through 7 key points that outline the story of Mt. Gox and its impact on the world of Bitcoin. Jed McCaleb, a programmer who had previously created a site for trading Magic the Gathering cards, started Mt. Gox in 2010. As Bitcoin started to gain traction, McCaleb used his unique expertise to turn Mt. Gox into a cryptocurrency exchange by gathering insights into online communities and digital transactions. Mt. Gox was first introduced as a straightforward Bitcoin trading platform, but it soon developed into one of the first exchanges to enable widespread Bitcoin trading. With its user-friendly interface for buying and trading Bitcoin, it had taken the lead in the cryptocurrency market by 2011. The growing interest in Bitcoin as a cutting-edge financial technology and an alternative investment instrument drove its explosive rise. But there were serious drawbacks to this quick growth. The infrastructure supporting Mt. Gox was insufficiently strong to manage the increasing number of transactions or the more complex cyber threats that were appearing at the time. A crucial weakness that ultimately led to the exchange's demise was the absence of proper security procedures. In June 2011, hackers took advantage of security flaws in the platform to steal over 25,000 Bitcoins, which at the time were worth about $400,000. This was the first significant breach at Mt. Gox, because it highlighted the inherent hazards connected with digital asset exchanges that were still in their infancy. This episode was concerning not only for Mt. Gox, but also for the entire cryptocurrency ecosystem. McCaleb made an effort to strengthen security after this breach by putting in place measures like better password protocols and transaction monitoring systems, but these were mainly reactive rather than proactive, and fell short in addressing the fundamental problems with the platform's architecture. The event tarnished Mt. Gox's brand and cast doubt on its capacity to adequately protect user funds. Due to its market dominance and early reputation for dependability, many users persisted in having faith in Mt. Gox in spite of these difficulties. This exemplifies a widespread occurrence in technology, where users frequently put convenience and familiarity ahead of security considerations, an oversight that would have disastrous repercussions in later years. Following the original hack, Mt. Gox saw a growing number of security issues that severely damaged user trust and exposed structural weaknesses in its business practices. There were several instances between 2011 and 2013 where hackers took advantage of flaws in the system to change pricing or steal money from user accounts covertly. For instance, in a 2013 event, hackers were able to fabricate accounts and carry out trades that caused gullible consumers to suffer large financial losses. Because of insufficient internal controls and a lack of transparency on the exchange's operational procedures, these breaches frequently remained unresolved for long periods of time. Because Mt. Gox was one of the few exchanges with significant liquidity and trading volume at the time, many users stayed faithful to it, even though they started to voice worries about the security of their money on forums and social networking sites. Security was frequently viewed by management as an afterthought rather than a priority, and the lack of regulatory supervision allowed these problems to continue unchecked. The strain on Mt. Gox's infrastructure increased as more customers flocked there in an attempt to profit from Bitcoin's soaring value, particularly during times of high market speculation. This created a situation that was ready for catastrophe. The exchange unexpectedly stopped accepting withdrawals on February 7, 2014, alleging technical problems. This was the most disastrous breach in Mt. Gox's history. With traders unable to access their money and mounting concerns about what was going on behind closed doors at the exchange's Tokyo headquarters, this news sent shockwaves across its user base. Days later, it was discovered that because of persistent flaws in Mt. Gox's security architecture that had been ignored for far too long, some 850,000 bitcoins, or $473 million at the time, had been stolen over a number of years. According to investigations, hackers had been using the exchange's system flaws without anyone noticing for a long time. They were able to steal enormous quantities of Bitcoin without anyone noticing, including users and management, until it was too late to stop such massive losses from happening. In addition to causing users to suffer previously unheard of financial losses, this hack had a devastating effect on the cryptocurrency community as a whole. As concerns about possible systemic risks in digital currencies grew, many investors around the world began to worry about their assets on all exchanges. Just days after stopping withdrawals indefinitely without prior notice or explanation of what had happened behind closed doors before everything came crashing down so suddenly overnight, leaving everyone completely unprepared for such shocking news that broke across media outlets worldwide almost instantly after, Mt. Gox filed for bankruptcy protection on February 10, 2014, in response to the massive theft and growing pressure from users demanding their money back. Many people who had made significant cryptocurrency investments felt more vulnerable than ever before after this filing sent shockwaves through the financial markets of Japan and beyond, affecting investor sentiment globally. They realized that everything could disappear overnight and that they would have no recourse whatsoever if this happened again in the future, potentially jeopardizing future investments made elsewhere. Significant disparities in Mt. Gox's financial records were uncovered during the bankruptcy proceedings, and it was discovered that the exchange had failed to accurately account for a significant portion of its assets and liabilities during its operations prior to this collapse. This raised serious concerns about mismanagement within the exchange's ranks and had wider implications regarding the urgent need for regulatory oversight going forward, given how quickly technology is evolving and the constantly changing landscape necessitates vigilance, always adapting accordingly, proactively, rather than reactively addressing potential threats posed by malevolent actors operating in today's digital space. Following the collapse of Mt. Gox, Mark Karpeles was subject to harsh legal consequences as authorities sought to hold him accountable for one of the biggest cryptocurrency hacks ever documented, highlighting the high stakes involved in unregulated markets with inadequate safeguards protecting consumers from fraudsters seeking to take advantage of weaknesses in the system. He was detained in Japan in August 2015 on charges of embezzlement and data manipulation pertaining to financial records during bankruptcy proceedings. This action signaled a serious crackdown on the widespread mismanagement of cryptocurrency exchanges, which made regulators around the world take notice and ensure that stricter compliance standards are enforced everywhere moving forward to better protect investors' interests and rebuild trust after such tragic events occurred in the past. Karpeles denied any direct involvement in the hack, but he did admit that the company's CEO failed to adequately secure user assets after McCaleb left. This was back in the early days of the company, when everything seemed bright and promising, before things quickly went out of control and resulted in a disaster that ultimately led to the theft of billions of dollars worth of cryptocurrency, forever altering the landscape and influencing how people view the risks of trading digital assets online today. In the history of cryptocurrencies as well as global financial institutions, the disastrous Mt. Gox hack was a turning point that exposed serious flaws in centralized exchanges and sparked numerous calls for industry-wide. Enhanced security measures are desperately needed to ensure that stronger safeguards are put in place to protect consumer interests as we move forward into uncharted territory. Emerging technologies are becoming more complex every day, necessitating constant vigilance and proactive rather than reactive adaptation to potential threats posed by malicious actors operating in today's digital space. Following this incident and the scrutiny that followed, many exchanges implemented more stringent security measures, such as multi-signature wallets which require multiple approvals for transactions, cold storage which keeps assets offline, and enhanced regulatory compliance measures aimed at protecting user funds more effectively than before. As the market became more competitive, new players sought legitimacy among consumers who were wary of high-profile failures in the recent past, which shaped future expectations regarding safety standards across all digital asset management services offered online today. In the end, even though Mt. Gox serves as a warning about the dangers of centralized trading platforms, it also spurred important improvements in security procedures in the quickly changing cryptocurrency space, creating safer trading environments for investors attempting to understand the complexities of investing in digital currencies responsibly, and guaranteeing that stronger safeguards are in place to ensure that such tragedies never occur again. Because of these incidents, Mt. Gox continues to serve as a warning about the dangers of Bitcoin trading platforms and emphasizes how security procedures are always evolving in this quickly evolving sector. Thanks for watching our video, and don't forget to subscribe.